You want to know what $7.4 trillion disappearing looks like? It looks like Friday, January 30th, 2026. Gold had been touching $5,000 per ounce. Silver had just hit an all-time record of $121. People who'd been stacking precious metals for years, warning about currency collapse. Screaming about inflation, they were finally vindicated. The preppers were right. The system was breaking. And then at 10:30 a.m. Eastern Time, Donald Trump walked up to a microphone and said three words: Kevin Warsh, Fed Chair. Within hours, gold crashed 11%. Silver plunged 31%. $7.4 trillion in combined market value just evaporated. The worst single day for precious metals since 1980. If you don't understand what just happened, you're about to learn how the most powerful people on Earth can destroy an entire asset class with nothing but a name. Let me give you the exact timeline because the media is calling this profit-taking and healthy correction, when it's actually a precision demolition. Thursday night, January 29th. Trump teases that he'll announce the new Federal Reserve Chair the next morning. At this moment, gold is trading around $5,200 per ounce, up 70% in 1 year. Silver is at $115 to $120, up over 200% year over year. This isn't just a bull market. This is a full-scale rebellion against the entire fiat currency system. When precious metals run that hard, every single ounce purchased is a middle finger pointed directly at the Federal Reserve, at Jerome Powell, at the dollar itself. It means regular people stopped believing the system works. Friday morning, Trump announces Kevin Warsh, former Federal Reserve governor, served during the 2008 financial crisis, known as an inflation hawk. This matters. A hawk means he favors tight money policies, high interest rates, strong dollar. Exactly the opposite of what Trump has demanded for 8 years. Trump has spent his entire political life screaming about cutting rates, weakening the dollar to help American exports, making borrowing cheap. And now he picks the one guy who represents everything Trump claims to hate. Within seconds, the algorithms understand. This isn't Trump getting his way. This is Trump surrendering to institutional power. By noon Eastern Time, gold had dropped to 7%. Silver was down 19%. By close of trading, gold finished down 11%, the worst single-day crash since April 2013. Silver ended down 31%, the second worst day on record, worse than anything since the 1980s. Platinum fell 14%. Palladium dropped 12%. The entire precious metals complex got absolutely annihilated in one trading session. $7.4 trillion deleted from existence. That's more than the GDP of Japan. Gone. In 8 hours. Now here's what you need to understand about why this matters beyond people who own gold and silver. This wasn't random. This wasn't technical selling. This was a demonstration of power. Kevin Warsh is not some neutral technocrat. During his time at the Fed from 2006 to 2011, he was the only member who voted against quantitative easing round 2. He warned constantly about inflation risks. He criticized the Fed for cutting rates too fast during the financial crisis. He's been publicly calling for the Fed to shrink its balance sheet, to stop printing money, to restore discipline. In other words, he's exactly the kind of person who makes precious metals investors panic. Because tight money policy, high interest rates, that destroys the thesis for owning gold and silver. But here's the twist that nobody's talking about. In the months leading up to this nomination, Worsh completely flipped his public stance. Suddenly, he's aligned with Trump. Suddenly, he's criticizing the Fed for cutting rates too slowly. He called for regime change at the Federal Reserve. He started sounding like a dove, like someone who'd print money and cut rates aggressively. And the precious metals market believed it. That's why gold ran to $5,200. That's why silver touched $121. Investors thought Trump was going to install someone who'd destroy the dollar to help his political agenda. And then the announcement comes and reality hits. Worsh is the same hawk he always was. The recent dovish talk was theater, performance art to get the nomination. And now that he has it, the mask comes off. The market reaction tells you everything. The US dollar index, which had fallen 11% over the past year, suddenly spiked up 0.5% within minutes of the announcement. That's a massive move in currency markets. It means every hedge fund, every algorithm, every institutional trader instantly understood that dollar weakness is over. A strong dollar is poison for gold and silver because precious metals are priced in dollars. When the dollar strengthens, it takes fewer dollars to buy the same ounce of metal, so prices fall. It's mechanical. But more importantly, a strong dollar means the Federal Reserve is in control. It means inflation is being managed. It means there's no currency crisis. And if there's no crisis, why own gold? Why stack silver? Let's talk about what actually drives precious metals prices because most people misunderstand this completely. Gold and silver don't go up because they're valuable. They go up because people stop trusting the alternative. When inflation is running hot, when governments are printing trillions, when central banks look incompetent, people buy metal. It's not an investment. It's insurance against systemic failure. That's why gold ran 70% in 1 year. It wasn't because gold became more useful. It's because the dollar looked like it was dying. Trump's trade wars, deficit spending exploding, global allies starting to question dollar dominance. It all created this perfect environment where metal looked like the only safe haven. And then Worsh gets nominated, and the entire narrative collapses. One strategist at B. Riley Wealth Management said it perfectly. There was going to be some trigger that would cause a technical pullback. Investors were ready to take profits. Translation: everyone knew metals were overbought. Everyone was looking for an excuse to sell. Worsh was that excuse. But calling it a technical pullback is garbage. This was coordinated institutional selling. The big players, the ones who bought gold at $3,000 and silver at $40, they got the news early. They dumped massive positions. Retail investors, regular people who bought at the top because they finally believed the system was breaking, they got crushed. Here's the part that should make you furious. While gold fell 11% and silver dropped 31%, guess what happened to Treasury bond yields? They went up. Yields rise when bond prices fall. That means investors were selling bonds too, which normally would be bullish for gold because bonds and gold compete for safe haven demand. But both fell simultaneously. That only happens when the dollar is strengthening so aggressively that everything else becomes less attractive. The Fed, through Trump's nomination of Worsh, just sent the clearest possible message. We control the dollar. We control interest rates. We control markets. Don't fight us. Kevin Warsh isn't even confirmed yet. He still has to go through Senate hearings. He won't officially take over until later this year when Jerome Powell's term ends. But the market doesn't care about official start dates. The market cares about expectations. And the expectation now is that monetary policy is about to get significantly tighter. Higher rates for longer, stronger dollar, less tolerance for inflation. All of that is catastrophic for metals. Even if Worsh ends up being more dovish than his reputation suggests, the damage is done. The $7.4 trillion panic is baked in. Now let's talk about what this means for your actual life, not just for people trading commodities. First, if you have a mortgage with a variable rate, you're about to get wrecked. Worsh's reputation as a hawk means interest rates are staying higher. The market was pricing in rate cuts through 2026. That's over. Expect your monthly payment to increase. If you were planning to refinance, that window just closed. Fixed-rate mortgages are going to stay expensive because bond yields are rising. Housing affordability, which was already terrible, just got worse. Second, if you have credit card debt, same problem. Credit card rates are tied to the Fed funds rate. A hawkish Fed chair means that rate stays elevated or potentially goes higher if inflation doesn't come down fast enough. You're going to be paying more interest on every dollar you owe. The debt trap gets deeper. Third, your 401k. Stocks initially dipped on the Worsh news because higher interest rates make borrowing more expensive for companies. But here's the weird part. After the initial drop, stocks might actually recover because a strong dollar and tight monetary policy signal that the Fed is serious about controlling inflation. Wall Street loves that. They'd rather have controlled deflation than chaotic inflation. So your retirement account might be fine in the medium term. But if you were holding gold or silver mining stocks as a hedge, you just took a 30% haircut in 1 day. Fourth, inflation. This is the big one. Worsh's entire public identity is built around fighting inflation. He's criticized every round of quantitative easing. He's warned about balance sheet expansion. He thinks the Fed has been too loose for too long. If he actually implements tight money policies as Fed chair, inflation should come down. That sounds good, right? Except tight money policies also cause recessions. They destroy jobs. They make borrowing impossible. The cure for inflation is economic pain. And regular working people always feel that pain first and worst. Let me explain the trap you're in. If Worsh is dovish and cuts rates aggressively to keep Trump happy and avoid a recession, inflation stays high. Your purchasing power gets destroyed, and gold and silver eventually recover and run even higher than before. If Worsh is hawkish and tightens monetary policy to control inflation, the economy slows down, unemployment rises. Your job becomes less secure, and even though gold and silver stay cheap, you can't afford to buy them anyway because you're struggling to pay rent. Either way, the middle class loses. The only winners are people who own hard assets with no debt and people who control the monetary system. Here's what the gold and silver crash really reveals. The Federal Reserve's power is absolute. Trump, the most powerful politician in America, just proved he cannot challenge the monetary system. He talked tough for years about firing Jerome Powell, about taking control of the Fed, about returning to sound money. And when the moment came to actually do it, to nominate someone who'd execute his vision, he picked a Fed insider who represents everything Trump claimed to oppose. That's not four-dimensional chess. That's surrender. The institutions won. But let's talk about whether this crash is permanent or temporary, because that's what you actually care about. Gold is still up over 70% from where it was a year ago. Even after an 11% crash, it's trading around $4,800 to $4,900 per ounce. Silver, even after dropping 31%, is still at $84 to $86 per ounce, nearly triple where it was in early 2025. So the question is, was this a correction in an ongoing bull market, or was this the end of the precious metals rally? The answer depends entirely on whether the underlying problems that drove metals higher in the first place actually get fixed. Gold and silver exploded because the US government is running $2 trillion annual deficits, because the national debt is $36 trillion and growing, because global allies are questioning dollar dominance, because inflation ran hot for 3 straight years, because trust in institutions collapsed. Has nominating Kevin Warsh fixed any of those problems? No. It's fixed the perception that those problems are being addressed. But perception isn't reality. If Worsh takes over the Fed and actually implements tight money policies, actually shrinks the balance sheet, actually raises rates to crush inflation, the recession that follows will be brutal. And during that recession, the government will be forced to spend even more to prop up the economy, which means more deficits, more debt, more money printing, and eventually inflation comes back worse than before. At that point, gold and silver don't just recover. They go exponential. This same cycle played out in the 1970s. Paul Volcker raised rates to 20% to kill inflation. It worked, but it caused massive economic pain. And it only worked because the US wasn't running permanent structural deficits back then. Today, the government can't afford high rates. The interest payments alone on $36 trillion of debt would consume the entire federal budget. So here's the reality. Worsh can try to be a hawk. He can try to tighten policy. But the math doesn't work. The system is too far gone. At some point, probably within 12 to 18 months, he'll be forced to cut rates and print money again. Not because he wants to, because the alternative is a complete collapse of the treasury market and a sovereign debt crisis. When that happens, gold and silver will rally back. But in the meantime, you're going to see volatility like this. Massive crashes, massive rallies. The ride gets wilder from here. What do you actually do? If you bought gold at $5,000 or silver at $120, you just learned an expensive lesson about buying at all-time highs. Don't panic sell now. The damage is done. Selling after a 30% drop locks in your losses. If you believe the thesis when you bought, nothing has fundamentally changed. Hold through the volatility. If you were thinking about buying metals and you missed the rally, this crash is your opportunity. Gold under $5,000 and silver under $90 is significantly cheaper than it was 72 hours ago. The question is whether you believe the long-term case for precious metals. If you think the dollar is doomed, if you think inflation will come back, if you think the system is broken, then crashes like this are buying opportunities, not reasons to panic. But here's what you absolutely must understand. Precious metals are not an investment. They're insurance. You don't buy insurance hoping it pays off. You buy insurance hoping you never need it. If the system actually collapses, if the dollar loses reserve currency status, if we get hyperinflation, your gold and silver will preserve purchasing power. But you'll be living in a world where grocery stores have empty shelves and society is falling apart. That's not a win. That's survival. So don't bet your entire financial future on metals. Diversify. Own some metal. Own some stocks. Own some real estate. Have cash. Have skills. Build resilience. The Kevin Warsh nomination and the $7.4 trillion metals crash is a warning shot. It's the Fed demonstrating that they still control markets. They can create crashes at will. They can engineer rallies at will. You are playing a game where the house makes the rules and changes them whenever they're losing. The only way to win is to understand that you're not actually playing against other investors. You're playing against the institution, and the institution has unlimited resources, unlimited information, and no accountability. Stop complicating it. Start getting free.